Hello, this is our Bikes group called YYSD Bikes. I'm Dustin. I'm Yao. I'm Chen. I'm Sean.
Our group is YYSD Bikes. It consists of Yu Chen, Yao, Sean, and Dustin. Financial results. Our sales were $14 million with 88,000 units sold. The cost came in at $3.8 million with profits of $2.7 million. Shareholder value was $25.35 and our earnings per share were $2.758. For marketing strategies, we had a mid-ranged price for the mountain bike to capture a higher target of people. TV was 20%, magazine was 47%, and internet was 33%. For gross margin, we started off at approximately $3.3 million, and by the end of 2018, we reached $7.4 million. Not only did our gross margin increase, but so did our net income. It grew from $800,000 to just under $2 million in 2018. We have also included the numbers from the year 2019, but our 4-year analysis for all slides is 2015 to 2018. For total assets, we began with roughly $5.5 million and reached $11 million by the end of 2018. Total liabilities saw a small jump from $1.3 million to $1.8 million, but nothing that surprised us too much. At the end of 2019, we had $16 million left over, enough money to produce a new type of bike if we wish. The gross margin experienced by our company has remained quite similar throughout the years, with the largest jump from 39% in 2015 to 49% in 2016. After this, gross margin has had an increasing but minimal change. Expenses have fluctuated across the years mainly because of the advertising expenses, with an all-time low of 18% in 2017. Our net income has had an overall positive growth with a large increase from 9% in 2015 to 19% in 2016. Our net income has decreased for the 2018 period because of the improper estimate we had on how many bikes we should produce. We lost many sales and this decreased our overall net income. The ability of our firm to pay off short-term debt has increased overall with a current ratio of 12.4 to 1. This indicates that our company has a good short-term solvency and is considered very liquid. Our debt-to-equity ratio has decreased every year since 2015, which suggests an increase in our ability to pay off long-term debt. The earnings per share had an overall increase, which appeals to investors because it is constantly increasing. The return on equity has been inconsistent over the years, which most likely means we are not managing our money as effectively as we could be.
Cyclemania is our main competitor because they have their maintain price at $680, which is close amount to our price of $690. Their shareholder value has increased from 12.5 in 2015 to 21.4 in 2018. Their profit after tax has fluctuated between 1.3 and 1.9 million between 2015 and 2018. Their cost of goods sold has increased from 4.7 to $7.3 million from 2015 to 2018. In our words, profit after tax has decreased with a charge of 19.5% during the 4 years. Cost of goods sold has increased from a charge of 28% from 2015 to 2018. Our sales, cost of goods sold, and profit are comparatively less than our direct competitor, but higher than the industry average. But the gaps are pretty small, and we have a higher profit to sales ratio, which is 17.5%. So the most important things we have to do is increase our sales. Our units sold has decreased every year since 2015 from 23.2 thousand to 21.8 thousand units, except 2017. Even we have a slider above average units sold. However, our direct competitor has higher overall sold. So we still need to reconsider our sales strategy. We have the lowest price bike in our world every year. We keep our bike at the price of 570 to 690, which is below the average price, like 700.
For awareness analysis, our awareness has an average annual increase of 7.36%, bringing us to 26%, which is the fourth in our world. The average in the world is 26%, and our competitor is 27%. For public relations, our public relations has got down each year from 0.13 to 0.09. This isn't an issue because the mountain bikes have a low sensitivity to PR, so we spend the average amount of money on PR at other firms. For distribution, our distribution has increased from 0.29 to 0.45 from 2015 to 2018. This goes beyond the industry average and our direct competitors. Cyclomaniacs has raised its distribution rating to 0.42. The reason we sold this amount of bikes is because of the high awareness. We spend less money on public relations and more on advertisement because that is more appealing to the mountain bike consumers. For quality, our quality keeps the same level because we did not reinvest the money into it, and we didn't cut its budget also. We put our money into efficiency because we were looking to introduce a used bike where quality is less prioritized. We are still beyond the industry average and also above the quality of our direct competitor.
Our wastage has increased every year due to increased capacity and not selling all of our bikes in stock each year. We were increasing the capacity during these years because we were planning to introduce a youth bike, which is a low-price, high-volume industry. Our idle time increased in 2016 and decreased in 2017 and 2018. We are below the industry average, therefore we're using our capacity more efficiently than the other firms. In order to decrease the idle time, we could either increase efficiency or decrease capacity. However, this is not a major concern because our firms plan to produce more in the future and we will need the extra capacity when we introduce youth bikes. We have not increased capacity. As of now, we are below the industry average, but we want to increase our capacity in the future. Our competitors have a greater capacity than us. This is not a problem for us since we are going for a moderately high-priced bike being produced in low volume. Our wastage was above the industry average by 2%, but below our competitors by 9%. Our above-average wastage made the cost of goods sold more expensive. Our quality was above the industry average and our competitors. Our firm's future challenges include competition in the youth bike industry because other firms have entered this industry, which means we will have high competition. Costs of goods sold are continuing to increase, which will continue to hurt our firm's profitability. Our firm had lost sales, so we would like to increase sales units as we enter the youth industry and continue to grow our business.
Thanks for watching our video and taking the time out of your day. We